Exercise 4-21. We're going to journalize the closing entries, but this time from T accounts. So selected accounts for Kennedy Photography at the end of December are as follows. So we've got some T accounts. We're going to journalize Kennedy Photography's closing entries as of the end of December. As always, record debits first, then credits. Select an explanation on the last line. And my accounting lab even reminds you, we're going to start by closing the revenues. So we have to find our revenues in our ledger over here in the form of T accounts. And we have one revenue, it's service revenue. And it looks like we've got 36,000 and 7,000 for a total of 43,000. So how do we close this account so that it has a balance of 0 for the next year? We have to put 43,000 on the opposite side, the debit side. And now we need to remember the 4 steps for closing our books at the end of the period. First step was we close revenues to income summary. So we've now closed our revenues. Next step is we need to close the expenses. And where do we close expenses in step 2? We close them to income summary. So let's look over here for our first expense. I see salaries expense. So we've got 31,600 on the left plus 1,300. So it looks like we got what? 32,900 on the left side, the debit side. So to close that, I would credit that. So 32,900 on the right side. And that is salaries expense. Our next expense is supplies expense. So that will be 3,200 on the right side. And then we've got depreciation expense. We have 1,700 on the left side. So to close that, we're going to put that on the right side. And then we've got 6,900 depreciation expense on the left side. So to close that, we have to credit it the opposite side. Depreciation expense building. So now what we have to do is we're going to add these up. And these debits or these credits will add up to the single debit. And that looks like it is 44,700. And this step was closing our expenses. Step 3, we need to close income summary. So to calculate how we're going to close income summary, we need to do a T account on a piece of scratch paper to show us what our balances are in income summary. So I'm going to close the data table. We don't need that for this step. And I'm going to scroll up so I can see the 2 places where we have affected income summary. So I'm going to do my T account in Excel since it's hard for me to show you scratch paper. So all we need to do is post anytime we've affected income summary. So the first time we've affected income summary, let me get Excel back here, is we have credited it 43,000. So on my piece of scratch paper, we're going to put 43,000 on the right side because that's what I did in the journal. And then the next time we affected income summary was 44,700 on the left side. Now we need to calculate our balance. And the balance has to go on the bigger side, so it looks like this is going to be the bigger side. And since I'm in Excel, I can just have Excel do the math for me. So it looks like we have a debit balance of 1,700. So now I need to close this account. So how do I close the account? The closing will be on the opposite side. So let me put my label here. Always label your T accounts. So I'm going to put 1,700 on this side. Let's just give it a different color. So this is my closing of income summary, the 1,700 on the right side. So now I'm going to go back to my accounting lab, scroll down, and remember this closing amount was $1,700 on the right side. So that's the credit. So income summary is going to be the credit for $1,700. Now, we need to remember in our closing steps, this is step 3, where do we close income summary to? We close it to capital. 1,700. Now, you should double check. Which way is capital going? Capital, if it's being debited, capital is going down. So that must mean this income summary must have contained a net loss. So let's just double check our revenues and expenses. And here you go. Our revenues were $43,000 and our expenses were larger, $44,700. So this $1,700 does represent a net loss. So it does make sense that capital would be going down. And this is closing income summary. And the fourth step is we need to close withdrawals to capital. So let's go figure out what our balance in capital is. Excuse me, not balance in capital, balance in withdrawals. Here we go. Wow, we got $23,000 of withdrawals. So to close this, we have to credit it. So I'm going to put it on the credit side. That's withdrawals. And since capital is being debited, that has to be listed first for the same amount. And you should double check. Make sure it makes sense. Capital is being debited, meaning capital is going to go down. So is that what withdrawals do to capital? Do withdrawals decrease capital? Yes, so that makes sense. Cool. Now the last thing they're doing is they're asking us, well, what's the balance of capital? Well, to do that, we have to first know what the beginning balance of capital was. So the beginning balance of capital is right here, $60,000. So we should do a T account, and I've done a T account. Here's a screenshot of the T account. So we do a T account. I put the $60,000 on the left side, excuse me, the right side, because it came from right here. So we're done with that data table. Now we're going to scroll up. I don't need to scroll up because the other two times we affected capital are right here. So let me bring back my screenshot. So the next task is to find where we debited or credited capital in the journal and then post those. So we've got capital right here, 1,700. So that's why I placed 1,700 right here. And then we've debited capital again for 23,000 on the left side, 23,000 on the left. So now we just need to calculate our balance. 60,000 minus 1,700 minus 23,000 gives us a new balance of 35,300. So remember, capital has its plus sign on the right side. So 60,000 minus these two numbers gives us 35,300. So I can plug that into here, 35,300. So capital went down significantly. It went down significantly from 60,000 right here down to 35,300, mainly because there's a ton of withdrawals and there was a small net loss. And that's it.